Hi traders, hope you're doing well. Welcome to my video on the VIX indicator. Okay, so this is the volatility index indicator, and I'm going to show you how you can use it to help you capture moves such as this one for over 300 pips. Okay, so this is the MT4 trading platform I'm using. This is a euro dollar 1 hour chart. I have the VIX indicator displayed here below my chart. I'm not going to go into the complexities of the indicator. I'm just going to break things down and keep it as simple as possible for you. Okay, so as the name suggests, the volatility index indicator, we're looking for the to measure the volatility of the markets. And I'm just going to show you how I implement it within my trading strategy. It's not necessarily maybe how other traders would, but this is what I find works for me. Okay, so as I said, this is a 1 hour chart. The reason I'm trading on the 1 hour chart is because I prefer the higher chart time frames. That's the 1 hour, 4 hour, daily, weekly, monthly. Reason being is they contain more price data, and therefore I find the trading signals tend to be much more reliable. When we can capture moves like these for hundreds of pips within the space of a few weeks, I'm not sure why we'd want to stress ourselves out trying to scalp a few pips on 1 minute and 5 minute charts. Higher chart time frames also mean less time chart watching, which is great. Okay, so the VIX indicator you see is displayed here, and basically it's measuring the volatility. Okay, I'll just keep it as simple as that for you. And how would I use it? Well, the first thing I'm going to do is I'm going to look for the trend direction. Okay, I don't need a fancy indicator to tell me that the market is making lower highs, therefore we are in a clear downtrend. Okay, just to state as well, this is, as I said, the euro dollar chart. You can use this strategy on any trading instruments, Forex, cryptos, commodities, stocks, indices, bonds, etc. Okay. So the first thing to do is identify the trend, right? We see a downtrend there, okay? So we know we're going to sell. I'm not going to look for buy trades because we're in a downtrend. So I just need to know when to sell, okay? And how I would usually go about that is I would wait for a big move down like this and then a pullback. So this is a pullback. It's basically when the trend reaches a level of support here, price makes a pullback, which forms a level of support, which you can see here. Okay, so support, 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 and a breakout of this trend line. Nice M pattern formation there, and then this support becomes resistance. And I'd be looking to trade on a breakout of this level here. As you can see, there were other traders watching this exact same setup and produced a nice breakout trade to the downside, and we could have been in without any technical indicators needed for, almost 300 pips of profit potential on that. Stop loss I would have placed above the high here. So you're looking around 15 pips. Okay. And as price fell down, I'd just be moving the stop loss to break even initially, then above the highs. Okay, just to trail the price as much as possible to maximize each move. What I wouldn't want to do is see this big bearish candle here and panic and exit the trade too early whilst it would still be a good profitable trade of 50 plus pips. I mean, there's a lot more in this move that we don't want to leave on the table. Okay, so once we're in a good position, we want to maximize it as much as possible. Otherwise, we need to risk re-entering. The more you re-enter, the higher your chances are of getting your entry wrong. That being said, there's a nice entry there. Pullback, breakout, exact same concept. Another one here. So we have support, pullback, breakout. Okay. So there was ample opportunity, support, pullback, breakout, ample opportunity to enter in on this trend regardless. You don't want to end up selling too low, of course. The earlier you can get in, the better. Okay, so that's why I would have traded this particular move. Where does the VIX indicator come into play with this? Well, as you can see so far, it hasn't. And that's simply because I'm just trying to emphasize the point that you don't need to rely on specific indicators for catching good trades. As long as you've got sensible money management, you know how to draw your trend lines, support and resistance, and have an awareness of the various candlestick formations, you can create a solid trading strategy, especially when trading on the higher chart timeframes where there's plenty of price action to make the those factors I just mentioned be more prevalent. That being said, if we're going to force the VIX indicator into this strategy, this is how I would do it. So this is a measure of volatility, as I said, this indicator. So what I'm going to do is still going to trade in the direction of the trend. I mean, if you want a range trade, it could be used for that. Basically, the lower this is, the less volatile the market is, okay? So if you're range trading, okay, you might want to wait for it to be low. Like if we just mark, you see where it's low here? Okay, so if we just mark that low there, that low there. So anything between this is quite low, isn't it? So what would we do? You can just mark your support and resistance within these zones, and then you can trade the range if you're a range trader. Okay, so buy at the low, sell at the high of the range when it's low. Okay, whether you're timing your entry with a stochastic crossover, a CCI extreme, ADX trend, whatever you're using within your range, you can pick off ranges. You can use the VIX to identify ranges and pick off your trades that way. However, I'm trend trading. The trend is your friend. I don't see why I'd want to trade against the trend or, get chopped potentially in and out of the market during a range. Instead, I'm going to wait for a big trend like this and just jump in on it. We have so many trading instruments to follow. Okay, lots of chart time frames. I mean, there's going to be ample opportunity. I don't need to force trades that aren't there. Okay, so back to the VIX then. When it's low, less volatility, you can range trade if you like, or this is how I would use it. Okay, so I'd wait for it to increase in value as high as possible, the higher the better, because that tells me that there's a big move. Here you can see it increases up in value, and then when we look at the chart, we can see that meant there was a big move downwards. So that's the first indication of a trend, okay? Strong trend. And that tells me I want to enter in on this trend. So I'm going to wait for the VIX to fall, so basically the volatility to decrease, okay, which means a pullback. As you can see here, the price pulls back as the VIX decreases, okay, and then that's when I know it's time to start looking for an entry before the VIX kicks off again, or increases in value again. I'm going to be plotting my move to get into this trend. And then as we see the resistance here and the market making these lower highs, okay, we can brace ourselves for, as I said, this breakout trade here. And then as the VIX begins to increase and the momentum picks up, it coincides with the continuation of the move downwards. And you can have your divergence to confirm that, which is the higher lows on the VIX, higher lows because it's increasing in volatility to the downside because we know that the price is falling, and that's how I would use it to help with entry. It's not a necessity, but that could have just given some additional confirmation, and it can help to prevent you stay out of trades. For example, if you've seen this big move down here and you thought it might be a good idea to sell here at the low, okay, not only can you look at a chart and know that that's a bad idea, you can also look at the VIX that will tell you volatility is at a high. So do you really want to sell at the low? No, you don't. Not in this instance. We instead wait for the pullback and time our entry better. Just as after this nice move upwards on the VIX, you can see a peak here. It starts to fall again, dwindle down, and that's when we can start looking for our pullback, which happens here. And as again increases in value with the lower highs, so does the momentum on the chart. It ties in nicely with that breakout trade there. Okay. So same principle again, as it decreases in value, so does the trend, so to speak. So we're seeing a pullback, which we can see on our chart. And as soon as it increases again, it coincides nicely with our breakout here. Maybe not as significant. We don't have the higher lows as we did here and here, but nonetheless, this level actually comes more prevalent later on in this move over here. Okay, so it's still a valuable trade there. We've still got our lower highs, can enter into the sell trend that way. Okay, so again, as it falls, so does the trend, which is a pullback. Then as it increases in value, so does the trend here. Nice breakout. And you can get in on the momentum there. As you can see, this move here coincides nicely with the higher lows, showing us the volatility is increasing. And at the moment, that volatility has dropped. Okay, it's dropped below this line as well. So we know that, okay, perhaps the pullback's happening. And that's exactly what's happening. And we could be primed for waiting to see what happens around this breakout level here. Okay, I've just noticed another one there, that level of support held up well. We could have taken these trades. Support actually became resistance. We could have taken these trades without the VIX, but you could see the VIX there. Actually, you could have even used that as the breakout level there for the trade. Okay, as the volatility increased above that level of volatility, it was tying nicely with that breakout there to the downside. Okay, so these are the various ways you can trade with the VIX. Careful here, you don't want to sell at the low, so it'll be interesting to see how this plays out. But another thing worth mentioning, you see that breakout trade there on the crossover. We were looking at the VIX making the low highs, but you can also see that it did have a breakout as well of these peaks there. Okay, so that's just extra confirmation along with the divergence, the breakout above the peaks. Same with this one here. Okay, if we just draw a line there and then plonk the line there, just as it crossed over there, the price as well had a breakout. So, you know, I mean, it's almost like an upside down version of the chart here, because we're in a downtrend. We find, let's have a look. Where can we find? Let's have a look. So we got an uptrend here, nice uptrend. You can just apply the same principles really. So you can see markets making these higher lows, so we know we're in an uptrend. Okay, we can wait for a big move up like this, then wait for it to fall back down again. We know that there's perhaps a pullback, and then as it increases in value, we can start to consider entering in on the trend on a breakout, whether you want to I'd say risk, but that is a decent level of resistance. It does actually become support, as you can see there as well. The VIX does go up in value. You know, you could have waited for the next opportunity if you just want to see this level of support form on the volatility indicator there, and then we have the resistance breakout. You can see from that big breakout candle coincides nicely with an increase in the VIX level. It's also making these higher lows there as well. Okay, up to there. Okay, so that was nice confirmation for that trade. Then as it dropped again, what does that mean? It means pullback. So we look for a pullback, and the pullback happens there. You can see a nice breakout candle there as well. Okay, if we just mark that, coincides nicely on the VIX indicator with the higher lows, and going back, returning back in an upwards direction, and even a breakout of the peak there as well, just as the previous one was also breakout of the peaks there. Okay, so this is my interpretation, as I said, of how I would use the VIX indicator. Is open to interpretation. For example, this one here, if we just mark this on a chart, I mean, not everybody would have drawn the resistance like that. I mean, a lot of people would have just done it that way. As you can see, then the resistance comes, you know, holds up there, holds up there, holds up there. Then that resistance line then becomes support. Shows that probably more traders were using it in the more traditional horizontal format there. Okay, but had we have taken this one, okay, based on that angle there, this one, we go down to the VIX, you can see the volatility was low, so it did suggest the pullback, and then we did have an increase, probably more. See the cluttered the chart here, apologies for that, but you can see the higher lows there. Okay, it did go up in value, and also more interestingly from my perspective is we had our resistance clear on the chart there. This is a 1 hour chart time frame, so there's plenty of price data within that. You also have a 3 inside up bullish candlestick pattern there, which is basically a bearish candle followed by a bullish candle that's 50% of the bearish candle's body, and then another bullish candle which breaks above the high of the initial bearish candle. So it's a strong buy-in signal as well, not to mention the higher lows on the chart as well. So ample opportunities to enter in this uptrend using the VIX indicator as well. So, you know, we applied the exact same principles. We just wait for a spike upwards. Okay, even here. So we have a big spike upwards, and we wait for it to pull back, which is a pullback on the chart. And then we can just enter on a breakout or the resistance for a long trade or support for a sell trade. It's got a nice wedge formation there. I've got videos on various chart patterns such as the wedge as well and candlestick patterns, but a nice breakout there to the upside. And when you see this consolidation here, you want to exit your position if you haven't already. You've got your resistance, strong resistance, and then the market starts to make these lower highs. Consolidation here, perhaps look to exit if you haven't already, and then you can see perhaps if you're range trading when the VIX is lower down here. I wouldn't range trade personally myself, but each to their own. And I mean, in this particular move here, you know, if you took the early breakout, you've got 200 pips potential. Even if you were more conservative and you wanted to wait for a breakout of this resistance level, you know, still 150 plus pips. Again, stop loss below the low. Below the lows, if you put it there, it's only 15 pips, relatively tight for the 1 hour chart time frame. And then trailing stop, as price moves up, just trail the price below the lows, okay, to maximize moves as much as possible. So yeah, that's my interpretation, as I said, of the VIX indicator. I'm using it to find volatility, and then when I see volatility, it tells me there's been a move, a big move. Perhaps I want to see if that indicates a trend. If it does indicate a trend, I'm going to look to time my entry into that trend by using a pullback. I can see their resistance, clear downtrend here. Okay, you've got this level of support here, triple top candlestick formation, resistance tested at least 3 times, breakout to the downside. Well, you've got got M pattern there as well, shorter breakout to the downside there, pullback, breakout there of that support line, and then a nice entry off that ledge there, big breakout candle. Massive trade there for you. I mean, stop loss above the high on that. What's that? Only 15 pips. Nearly 400 pips profit potential on that move. Trailing stop above the highs on the way down. Okay. Above the highs. Locking in profit. Closing part of the position if you want on the way down. So when price turns around, you've maximized the move as much as possible. Gaining lots of pips. So even if you do have a few losses, trying to anticipate the direction of the trend, you can make them back and more when you do catch a big move like this one. So the VIX indicator in this instance, we apply the same principle. We see this action. Okay, lots of volatility. You wait for it to drop. Okay. And then, so you've seen this big move up here. It dropped. And then as it increased again was the breakout. If you want it to be even more conservative, you can wait for it to drop significantly more, like around here somewhere. And then as it moves up again, you know, it is making higher lows. You've got a nice ledge on your chart there, telling you everything you need to know. And you could have traded on that breakout there. Still a good point to get into the trade. Okay. So it goes up again, goes down. So we know that we're having a potential pullback. So you could enter there. Goes down again. Okay, so we've got a big drop here. Market's ranging, and you know what we do in that instance. We know it's a pullback. We draw our support. Nice M pattern formation, big breakout. That's an NFP, non-farmers payroll, first Friday of the month candle, but we could have used that momentum to hop in on this downtrend and get in on the trend at a decent price point. Again, VIX indicator, high volatility, so big market movements. Wait for it to drop, trade the range if you want, and then as it starts to increase again, we know that volatility is picking up. Perhaps the trend is picking up as well. So what can we do in that instance? We can draw a support level and trade a breakout support. That support then becomes resistance. You're in this trend at a decent price point. And in fact, this is another strong support level that then becomes resistance. Give an ample opportunity to enter in on this trend. You don't want to sell too low. And you don't even need the VIX indicator, to be honest. You just know the trend direction. You can just draw where you feel is significant support, okay? And then just trade the breakouts. This probably won't work as well on lower chart time frames just because there's too much noise, but if you're using higher chart timeframes, tends to work quite well. Good money management, good discipline. Don't let fear, anger, greed, other negative emotions get in your way. Don't revenge trade, overtrade, FOMO, fear of missing out. Again, support, nice downtrend, support, breakout, support becomes resistance, a good opportunity to get in on this downtrend. Okay, and as I said, volatility, the VIX can also prevent you from buying or selling at the wrong point. For example, you might get excited, see this big candle and, you know, jump out your chair and say, I need to trade. And you look at the VIX and you say, okay, perhaps it's too high. I'm going to wait for it to decrease in value, which means a pullback and get in at a more favorable price point. Okay. Otherwise, you can end up just selling at the low point. Again, here, look, the VIX increases greatly in value. It's at its peak here. Okay. You probably don't want to sell around the peak here after you've already seen a nice move down like this. You know, want to wait for the pullback and turn your entry into a more favorable position. Okay, well, I do appreciate you watching. Hopefully you've learned something in this video. If you can like and subscribe, that would be great and really help my channel. Take care, and I hope to catch you on the next one.